Welcome back to the Blue Sense podcast. We are recording another episode from Cape Town. This time we're looking a little bit into the future. We'll drop this probably early December, just after Black Friday, with some of the thoughts that Nath has put together on Q1 planning. So every January, we get a lot of brands that panic, and we've spoken to a lot of brands that start panicking because your sales are dipping, your ad performance is in the toilet. Everyone's blaming that it's seasonality. But is there a better way to be thinking about this? Is there a better way to be approaching planning for the period? So we're going to unpack how we think about building momentum through that period in the Blue Sense team. So let's start with the obvious, is just why is it such a difficult period for most brands?
Like, there's a lot of reasons. The obvious one is market sentiment is down. But you can go like a lot of steps further from here. So operationally, returns spike because it's post Black Friday. And so if you're in fashion, you end up with very high return rates, which suppresses net revenue, depending on how you're allocating the refunds. You've got effectively like discount fatigue. And so everyone has been used to just buying on discount for the prior 2-month period. And then they're going into a period of full price. We have wallet fatigue, and so everyone used most of their savings, or at least their portion of savings allocated to consuming products has already been allocated, and so they don't have any money left. Another reason is that you don't have any natural revenue spiking events in Q1. You really have Valentine's Day and back to school, and that's in. And for 90% of brands watching, neither of them are applicable. And so you end up in a position where Q1 revenue is very, very suppressed across the board. Demand is suppressed. And so then people walk into Q1 also, and I think this is the most underrated of them all, tired. They walk into Q1 and they're like Q4 is the period in where you're really gearing up for like 50% of your revenue as a e-commerce brand or as the online portion of a retailer. And then you're like, let's just chill for a quarter. And so not much planning or strategy goes into avoiding the Q1 slump. We have had brands last year that did incredibly well in Q1. We actually have a case study of Grampian Goods Co., where I believe in March, we started with them in Jan, and by March, they had one of their best months in the prior 12 months. They outperformed November in the month of March. And we can talk about the reasons as to how they achieved that specifically. But it was firstly by breaking the mentality that Q1 has to be terrible. I also kind of need to provide a little bit of pushback on myself there, because I think that particularly as we move into Q1, you're going to see a lot of meta ads from myself and others that are going to say Q1 shouldn't be terrible. Q1 should be a great month. Q1 should be a great period. True. But we also do have to just sit back and acknowledge all of the challenges that exist in Q1. If you wanted to ride life on easy mode, you wouldn't try in Q1. It's a very, very hard time to be successful. And so if you want to make Q1 good, if you want that to stack up into your financial year targets, for sure, put pressure and make it work. And you can do all the things that we're going to be talking about. But if you're like, it sounds too hard, Q1's probably not for you. Probably just stick to Q4, do some heavy discounting and push ads, because it is difficult to make Q1 work, but you can actually make it work.
Sure. And so I guess there's a lot of challenges there to look at, but we wouldn't be recording this if there wasn't some significant upside available as well. So where do we start with unpacking that?
So with all the challenges that exist, I would first see Q1 through the frame of why are we going to have revenue suppression? And therefore, then how can we solve it? And so we've listed a few of the problems there, and then we need to start to backfill into how do we think about solving those particular problems. And when we did this exercise internally about a month ago, we came down to really 3 solutions, which is that for almost every problem that exists, you need to adjust your creative and messaging, number 1. Number 2 is you need to change your offer and positioning. And then number 3 is you need to change your media buying or budget allocations across channels, campaigns, or new customer versus existing customer split. A really interesting frame to think through this is that if market sentiment gets worse in Q1, what's going to happen is you're going to see suppression on your regular efficiency across all of your ads, which means that only the truly great ads will shine.
Mhm.
The reason why that's the case is because there's a value discrepancy in the market. And so people see the value in your price tag as not being worth it when they're in a period where they have less money. And so you, through creative, can reframe value and then make people buy. You can change your offer, which increases perceived value and makes people buy. Or you can change your media buying strategy in which you're allocating budgets to particular audiences and people that see your product as valuable and therefore buy. And so it's really a discrepancy in the market in terms of value perception. And that's where you want to be thinking through solutions. You also you want to be very careful here, and you don't want to stop watching the podcast right now and then go and start making changes, because you can take this to a really bad extreme, which is that you can go, okay, I now know after watching 7 minutes of this video how to make Q1 good. We're just going to run crazy offers like it's Black Friday.
Yeah.
Wouldn't do that. I wouldn't do that because you're going to significantly tarnish the brand. Now people are associating sales every period of the year for you. You're not isolated to particular sales events. Number 2, you're going to be discounting in a low efficiency market anyway. So you're going to have a suppressed efficiency and you're going to be cutting your margins in half. Not a great idea. You're probably just going to end up at the end of the quarter trying a bunch of different discounting tactics. Everything kind of half works, and you end up total not making any more profit contribution than you would have just running it business as usual and not stacking a bunch of sales in. So you need to be very strategical about how you're solving each of these issues and how you're thinking about the value perception problem.
I mean, I think there's this sentiment that we see a lot that a brand's going to approach that as, oh, it's just seasonality. But I think that can be very different depending on the segment that they're in as well, right? Like a fashion brand that's had an amazing Black Friday is going to look very different to a fitness brand or a supplement brand that's maybe rolling into one of their best periods of the year where people are thinking about how they're thinking about the new year. Like, how should brands be thinking about their particular category when it comes to the period?
Yeah. So I think that should play into how aggressive you think you can get regarding your Q1 forecast.
Yeah.
And therefore how you're going to potentially allocate revenue peaks. The kind of first and easiest, if you're a brand that lands in these categories, is obviously the back to school and Valentine's Day. So if you have the ability to do a Valentine's Day promotion in some kind of capacity, it doesn't even have to be a discount, right? It's probably too late now to plan products around it, but the people that do really well are people that plan product launches around desired revenue peaks. And that is how they manufacture better months rather than simply discounting. We have worked with quite a few brands that have done this. I can give an example, which is a kids' toys brand. If you look at their revenue across the year, it's super lumpy and all over the place. And you go like, what is the seasonality trend here? You look at the previous year, it's random other months. And they're an 8-figure retailer, I believe. And the reason why they have all of these lumps is because they're purely product launch dependent, which is actually a very nice position to be in, because you can decide when your revenue peaks. You don't have to discount. And therefore you actually choose your own seasonality. And because of that, they have peaks in Feb, they have peaks in March, because they have specific products that launch in those periods around back to school in this example. So that's the first thing that I would think through. Do the two events that sit there, are they possible in any way? In future years, can we do some kind of product related launch or co-branding or something that's not discount related, an actual proper marketing event? I feel like discounting is just like e-com's easy way out of like trying to get revenue. It's like, I'll just slap a 20% off on, or just put a free gift with purchase. But the brands that do really well across the year without being reliant on discounting, they're going back to like fundamental marketing principles, which is how do we increase the reach of users that know about us without having to distort value. And so that is co-branding, that is product launches, that is you could do activations. There's like the list goes on and on. We could probably do a podcast in itself.
Yeah.
I think that'd be a good one.
I think there's an episode in there that's more evergreen than just, say, we're currently looking at our Q1 plan, that I'd love to get you and Oprah's thoughts on that sort of wider marketing calendar concept, because I think it's a lot of brands that comes up in a lot of growth conversations where a brand is like, yeah, no, we've got a calendar, and they've got some unhinged spreadsheet that's got a heap of events on it, but you go, what is the actual revenue strategy behind all of this, and how is that layering into your CFO saying he wants 20 or 30% growth this year? That I think is really interesting to unpack. So as we said, we're probably going to drop this sort of week 1 December. When should brands be really looking at, when is it too late to be thinking out some of these concepts? When, what's the easy stuff that they can turn around in a couple of weeks?
Yeah, so the easy stuff is creative and messaging. Going back to what we were talking about before, Q1 is, in my opinion, probably the best time to do creative testing. I think I mentioned this on the first ep of the podcast. And the reason for that is because if you launch creatives in Q4, generally creative testing in Q4, if you've watched any of our content, it isn't a great idea because you get false flags. Everything seemed to do well because you're in a very high demand market and you've got a lot of pre-existing users in the funnel who are going to purchase. And so it makes all ads look like they're doing a good job. As you move into Q1, there's so much suppression on market sentiment and demand that if an ad's working, that ad's going to rip all year. Like it's going to be a really good ad. And so because of that, putting creatives into the account at a high testing volume during Q1 is a great idea because you can start capturing winners across the Jan, Feb, March period that can then roll straight into Q2. You can start ramping up spend, particularly as you're starting to bridge into end of financial year, and you can be in a really good position. I would be focusing on, with Andromeda, having creative diversity. Probably majority of people watching this by now don't have enough diversity in their account. So I'd take Q1 as a really good opportunity to do that. You should have increased resourcing available within the company because there's going to be less focus on particular events. It's likely that most people watching this don't have events built into Q1 yet, or don't have many. And so that resourcing can go towards conceptualizing new creative, or you could be working with a better agency that's doing it for you. That's really number one. Number two, in terms of offer and value design, you can think about introducing new offers through Q1. I would, rather than thinking, because the issue is how people define offer. A lot of people hear the word offer and they just think about discounts.
Every conversation I have in growth.
Yeah. Or they maybe are bundles.
Yeah.
Or maybe it's a like gift with purchase. That's like not the frame that I would think through an offer at all. The offer really is the positioning of the product in the market and then how that's getting communicated to the user. And so how are we positioning this particular product at this time of year to our particular audience? And so a really good example would be supplements that you mentioned before. You could create a supplement offer, which is maybe a pre-existing bundle that already exists on the website, but it is reframed as a like New Year, New Me, like a New Year's resolution focused bundle, because it's got maybe all of the basic fundamentals for someone that's just getting back into the gym. Like it's like creatine, protein, and like maybe like a shaker or something. And so it's very specific. Already existed, already was ran previously. Might not be any discount on that. It's full priced. Like they're not getting any discount. But the offer resonates with people because it meets them where they are. And so you need to be thinking about where are users during Q1 for our particular business? And then how do we meet them where they are without necessarily discounting, but instead framing to meet their demand?
Yeah, that's I feel like that's me every January, and especially after the trip to Cape Town. So we've talked a lot about creative and messaging. I feel like the messaging component is you nailed it in terms of it's critical at any sort of yearly cycle, but particularly now with the conversation around Andromeda and what we're seeing in all our accounts right now. We've talked about offer and promotion. How do we go through the actual budget allocation or the media buying strategy with those two things in mind?
Yep. So the reason why this is even a point, because I get ads all the time, which is like, media buying doesn't matter. Don't think about it. And I somewhat 70% agree with that point. And so it was hard for me to put this in a headline.
Yeah.
Like media buying, like, it matters here. But the reason why it matters is because when you go into Q4, what's occurring is that you're taking the pre-existing funnel of everyone that knows about you, and you're collapsing them into a moment in which you realize revenue, which is the sale period. This is what happens anytime you run a sale, which is that you take revenue from before and after the sales period and you pull it into that specific moment. That's why if you're going to run any type of holdout test that is orientated around a sale, you always need to make sure to also include the week before and the week after, as you end up having revenue dips there as well.
Yeah.
That then get pushed into the sale. Reason why that's important is because everyone that was in the funnel is now gone. And so as you enter into Q1, one of the reasons for the slump is because everyone that has been targeted on Facebook by you over the last 3 months, if they wanted to buy, they have bought. They're not going to buy now when you're back at full price, that's for sure. And so you end up in a very bad situation in trying to get new customer acquisition to hold. How do you prevent that? We can kind of take two different paths. You can start to skew your media buying budget towards existing customers, particularly as budgets pull. So almost everyone watching this, your plan is that in Jan, you'll spend a lot less than you did in December and November. With that, means that you can allocate more spend to existing customers as a proportion of total spend.
Sure.
Because you might currently have 10K a month going to existing customers. That gets a frequency of 5 on your entire existing customer list. You might be happy with that staying at a 5 all year round. You always want to be in front of existing customers 5 times a month. As you move into Jan, though, the new customer budget suppresses. And so maybe now half your budget is on existing customers. ROAS looks really good in the platform. Everything looks great in terms of how the actual metrics are performing. Issue is you're not rebuilding the funnel. A lot of your spend has gone to bottom of funnel. And really what you're doing there is just trying to maximize profitability across the whole business, but you're really going to feel it in Q2, Q3 because your returning cohorts will degrade because you don't have new customers coming in.
Yeah.
So the alternative is to allocate heavily to top of funnel and rebuild the funnel that's effectively disappeared during the Q4 period. The issue there is efficiency will be very low at the start because you're getting new people in, there's a delayed time to purchase, and you have to sit around in that time to purchase period and just hope that these people buy eventually. The way that you can prevent this is by having a little bit more spend in Q4 to top of funnel. So you're continuing to generate awareness on top of funnel assets. And people might not be ready to buy in the Q4 period, but because they're getting warmed up, they actually do follow through and buy in Q1, particularly if there's some kind of product launch or event that's going to force them into a purchase. So you need to be thinking about how much spend are we allocating to new customers? What kind of audiences are we going to try to speak to as well during the period? And then what is that going to really look like in alignment with the forecast and expected results? Because if we are going to skew heavily towards top of funnel new audiences for the sake of Feb and March being very strong, you need to be okay with January efficiency on new customer acquisition being quite poor.
Yeah. And so how well Q4 or how poorly Q4 has gone for the brand going to play into that decision making, do you think?
Yeah, well, if you had a bad Q4, you're not going to want to bite negative profit contribution in Jan. So yeah, let's hope you have a good Q4.
Yeah. And then sort of to close us out, we do a lot of talking in our auditing and our work with clients around data integrity, because if you're making decisions on bad data, which a shockingly high percentage of brands when we meet them typically are,
Mm-hmm.
where do you start from looking at answering that question? Did we actually have a good Q4? And then we'll make decisions off the back of that.
Yeah. So when you're doing a Q4 retrospective analysis, I would be firstly focused on the delta between reality and the forecast, particularly on acquisition MER, profit contribution, then delineated down to new customer profit contribution. There's a lot of different directions we can go here in terms of exactly what you're analyzing. I think the most important one to get right is, did we generate the demand required to offset the erosion in margin that we decided to put forward? And what was our success KPIs on this sale? And did we hit it or did we get close? Because that's going to infer really how you're approaching end of financial year sales, based on the performance of that particular offer. Then secondary, you start to look at account structure. There might have been some tests run in terms of how you approached account structure. For example, you might have decided to optimize for 1 day click across a very short time period on Black Friday weekend because you want to prioritize users that are going to buy fast because the sale is about to end.
Yeah.
And so that'd be a very interesting test to run across that period that you want to do a retrospective on and say, should we also translate that into end of financial year? Really at the bottom of the bucket is creative. And I think that's one of the ones that's prioritized. I actually prioritized this quite a lot last year, which is I really pushed people to get creative insight as to what worked, what didn't across Black Friday.
Mm-hmm.
I don't think it's useless, but I don't think it's the most helpful thing to look at, because all the results end up coming from just 2 ads, which is the basic overlay ads that say, here's the sale, or just an evergreen ad with an overlay on it.
Yeah.
And so what is the insight there? Oh, that worked, but we already knew that would work. I've said this for the last 2 months. So
It's a fantastic offer.
yeah, there's no novel information. I think the better thing to focus on is how well the offer resonated.
Yeah.
I think probably a second thing to look at, which is a little bit more advanced, and you can only do this if you have a high risk appetite, is how did we pace spend across the month, and could we have paced spend better to better maximize efficiency? And then how did we spend up to the period? So how much spend went into September and October this year compared to last year? And what's the delta that we believe that resulted in increased demand in the November period? Because I would argue that most people underspend significantly in August and September to actually build the funnel, which then collapses and buys in November. And it's because those people don't buy in September and August. And so September and August look quite poor. One last comment is on the retention side, which we don't manage retention internally, but I would be looking at cohorts, not only the cohorts that purchased the most in November. So was it the October cohort, was it September, or was it August? That's really interesting data moving into the next year, because it tells you where you should potentially push harder on new customer acquisition, because we know we're going to get high repeat rates. Or all of the customers that we acquired in November, what's the repurchase rates on them in December, Jan, Feb? What you'll almost guarantee end up seeing, but the actual amount is more important, is they aren't very good customers.
Mm-hmm.
You don't get anywhere near the cohort lift that you would expect from an October customer or a Jan customer or a Feb customer. And because of that, you do want to weight that into your KPIs, particularly if you're a retention-focused brand. And so if you're opening up Shopify, you're looking at a dashboard and you have above 40% of your revenue comes from returning customers, it's likely that you'd probably have pretty good profit contribution growth on a 12-year basis after acquiring customers. Going to be wildly different between a November cohort and a Jan cohort.
Yeah.
Because of that, you might actually be able to operate at lower efficiencies in Jan and get the exact same amount of profit driven into the business over a 12-month period.
Yeah.
And so you might look at Jan and actually have an allowance to go up by $5, maybe even $10 in terms of your CAC, but be very happy. Yes, cash flow on first purchase won't be as good as November, but profitability over the next 12-month period will be the same, if not better.
Yeah.
Which is like, that's more advanced. I guaranteed like 90% of people won't do it. But
Yeah. I feel like I've seen you and Angus speak about that a lot.
Yeah. And we're going to talk about it too on the in-person event.
Yeah.
Yeah.
Which we will be in a week after this, when this comes out, I think. So yeah, get involved. If you're on Nathan's newsletter list, you've probably seen an invite to that or a note about the content that's coming. So, anything to add, or should we wrap it there?
I think we should, we can wrap it there. I think the important thing when we're looking like really long-term is that the most important thing that you could do in Q1 is plan product launches and collaborations and moments that connect your product with something within the market. The example that I gave at the very start about Grampian Goods Co. and how we hit the highest revenue month they've ever hit in March after we started working together with them in Jan. What led them to that position? There was the obvious. We came in and fixed a lot of the media buying, fixed a lot of the account structure, or fixed a lot of the data integrity. Like that all goes without saying. But at the end of the day, that doesn't achieve a revenue peak in March.
No.
So what does? It was a product launch of 2 different products that she'd been building towards across the prior 4 months, but there was delays in inventory landing. And so it was actually meant to drop in Q4 and it didn't drop in Q4, which was fine. They still had a great Q4 at expectation before we were working together. But then because they ended up coming through in Feb, there was kind of this dilemma of, do we launch these products or do we wait for a higher sentiment season? Yeah. And the answer is like, no, you don't need to. Launched in March, did unbelievably well. And then we ended up riding that through the rest of the year. And that was just the start baseline revenue, and revenue never dipped after that. And so it was all-time highs every single month after. And that was, I would argue that we have very little to do with that specific peak. Peak was completely down to really good, well, in this case, the planning kind of fell through, but imagine it was really good planning. If you can really plan through the marketing calendar, I think it is one of the most effective tools that you have. And then the paid ads agency is really the efficiency driver on the marketing calendar.
I mean, I think there's a point to be made there as well, at like the sort of shit happens point, for want of a better word, is like the planning's going to fall through at some point. Yeah. For most brands, there's going to be a mistake. There's going to be a delayed delivery. Yeah. What do you do? And actually playing around that and using that sort of, it creates this artificial product release marketing moment that can actually be really successful in its own right.
Yeah. And we'll do a podcast on the marketing calendar itself, because like, I think it's particularly when I started in working with clients in e-com, and it was like 6-figure, 7-figure businesses. I saw the marketing calendar as the biggest piece of marketing jargon I've ever seen in my life. I was like, this is straight out of a uni course. This means nothing. Why are we looking at this marketing calendar? All that matters is performance marketing. Like I was so strictly in that boat. I was completely wrong, number one. But number two, I was getting exposure to marketing calendars that quite frankly weren't very good. And they weren't very good because there wasn't revenue expectations set on the events. So it was just kind of like, here's some events, but why? Like what is the spend going behind these? What is the desired outcome, etc. And then the marketing calendar for 90% of brands of that size, it's just sales. So it's just 30% sale, 40% sale, gift with purchase, this, that, the other, that. And it's just, a marketing calendar isn't a calendar of sales and promotions. A marketing calendar should be like 10% that. And then 90% brand collaborations, partnerships, maybe influencer seeding in some capacity, like all of these different things that we can talk about in a full-length podcast.
I mean, we've met 9-figure brands where their calendar is literally just 52 weeks of weekly promos.
Yeah.
And I feel like that's, it's definitely something that can be unpacked, because you've got sort of two schools of thought. I think you end up with these marketing managers or operators that have historically worked brand side for their career. And if you work in a really great brand, that can be incredible, but it does limit your exposure to a huge array of different scenarios that you get in an agency.
Yeah.
But you probably also only get those in an agency as you shift into that more competent brand market, where you've got, the high 7-figure brands into the 8s and 9s, where you're getting really actually experienced people making those decisions and planning moments.
Yeah.
So watch out for that for a future episode then. So we'll wrap that there. If you are an 8 or 9-figure retail brand, if you're sitting in week 1 of December and going, we actually don't know how Q4 went, we think it went awesome, but we want to answer that question more articulately, we will run as Nathan quoted in a video from a couple of reviews yesterday, the best audit you've ever seen. But also we can actually run some models on those numbers and how your Q4 has gone, and build you a really accurate forecast for where you're going to go in Q1. So we'll drop all the details for that in the notes, and get in touch with us.